Welcome to the Weekly Option, the podcast for people interested in trading stock options. Each week, we cover trade ideas and opportunities in the stock market right now. Whether you're a beginner, a professional, or just curious about options, this is the show for you. Let's get started. Welcome to the Weekly Option. This is episode 330 on July 5th, 2024. I'm your host, Eric, and in this week's show, we'll cover the trades from last week on Beyond Meat, Inc., AT&T, and Snap, Inc., and we discuss three new trades on Nikola, Macy's, and Palantir Technologies. Now, it's always great to hear from listeners. If you have any questions about the trades presented here on the show or even about your own positions, feel free to email me. You can email questions to eric@theweeklyoption.com. That's ERIC@theweeklyoption.com. I've also created a few videos to teach you all the basics of option trading that you'll need to know to be able to follow along with me on this show. You can visit our website and click on the videos tab to watch them, or visit the YouTube channel for the Weekly Option. Now, both equity indexes finished the week above last week's close. The Dow Jones Industrial Average grew 257 points, closing at 39,375 points. The S&P 500 index gained 106 points, ending the week at 5,567 points. And now it's time for the topic of the week. The topic of the week is how I select trades. I actually had another topic of the week planned, but just a few hours before I was doing this recording, I received an email from Felix, who asked if I could provide more explanations for each of my trade ideas. The other topic I had was a bit more complex, and I'll probably explain it better if I let it kind of marinate in my mind for another week. So, Felix, you win. I'll make this super simple. There are two reasons that define most of my trade methods here. The first one is pricing. This one should actually be two, but I'm going to keep it as one. I use technical analysis to better understand where the stock price is and whether or not it's in a trend. Next, I look for option pricing that will allow for the desired profit relative to that trend. That means if it looks like a stock is trending higher and I can buy call spreads at a price that still allows me to make a great return on my money, then I'm interested in buying the call spread. So the first reason I select a trade is for price, the price of the underlying stock, and the price of the option trades themselves. The second reason comes down to probability. I look for trades that I feel like have a high probability of winning without needing a significant move in the underlying stock price. That's why I typically buy spreads that are already in the money, and I sell spreads that are out of the money. Of course, I can make this more complex by discussing news events and some of the specifics around the pricing that I look for in the options. Honestly, if you want to know all of that, you should join one of my coaching groups. I at least wanted to share this on today's podcast because Felix is not the first person to ask me why or how I select trades for the show. If you'd like to have a deeper conversation and learn more about coaching, just shoot me an email. So that's it for the topic of the week. Let's go ahead and get into the review of the trades presented on last week's show. We're going to start off with a covered call on Beyond Meat, Inc., symbol B as in Bravo, Y as in Yankee, N as in November, D as in Delta. At the time, the stock was trading for $6.71 per share. I looked at buying stock and selling the July 7 call at 41 cents, which could give us a return of 10.43% in 3 weeks. Well, shares of Beyond Meat grew 41 cents, closing at $7.12 per share on Friday. The call option we sold lost 14 cents, leaving us with a net profit of 55 cents if we were to close this trade out immediately. We stand to make 16 cents more on this trade by holding it until expiration if the stock remains above $7 per share. This trade is working out as planned so far, so the stock price is well above our break-even price. No adjustments are needed on this trade so far. Next up, we have the credit spread on AT&T Inc., symbol T as in Tango. At the time, the stock was $19.13 per share. I looked at selling the July 19-18 half put spread at 18 cents, which could give us a maximum possible loss of 32 cents per spread. Well, shares of AT&T lost 36 cents, ending the week at $18.77 per share. The out-of-the-money put spread that we sold It's now at the money, and the stock price is below our break-even price. That means that we have lost money on the spread, and we can consider making some adjustments if needed. The stock chart still gives me reason to believe that the stock is going to head higher, so I would lean towards holding off a few days before making an adjustment at all. Now, we still have 2 weeks left before expiration, so it's good to have a plan just in case this stock does continue to slide. One option is to sell a higher strike call spread against the put spread to create the iron condor. In doing the math on turning the short put spread into a long put spread, I noticed that I would be paying 57 cents for a 50-cent spread. That would guarantee a loss of 7 cents and increase the maximum possible loss to 57 cents. The math just doesn't work, so you wouldn't do that. That means the choice right now is to either wait for the stock price to increase or to sell a call spread to create the iron condor. Either way, it'll probably include taking a few days to see if prices head higher again. With only 2 weeks until expiration, I'll definitely have to stay on top of this trade for sure. Now, our final trade from last week was a debit spread on Snap Inc., symbol S as in Sierra, N as in November, A as in Alpha, P as in Papa. At the time, the stock was trading for $16.61 per share. I looked at buying the July 16 half call spread for 32 cents, which could give us a maximum gain of 18 cents, or that's a 56.25% return in 3 weeks. Well, shares of Snap lost 22 cents, finishing the week at $16.39 per share. The in-the-money call spread that we bought is now just at the money, and the stock price is still above our break-even point, so we are still hopeful for a profit. Still, it's a good idea to have a plan of defense just in case you need to make an adjustment. You can always look to sell another further out call spread. You can even create an iron condor against this long call spread just to collect more money to offset any losses. You could also look to turn this long spread into a short spread if prices drop below the long strike and stay there. Either way, it's a good idea to plan your strategy just in case the stock price falls again. For now, no adjustments are needed because we are still above the break-even point, which means this trade is still profitable at this current price level, albeit not as profitable as we initially planned. Let's just see what happens over the next week. And of course, remember, this trade expires on July 19th, which means there's only 2 weeks left. So we really have to stay on top of everything, each of these trades and the upcoming trades for this week's show. Now, this will be the final week of using the July 19th expiration for new trades. With only 2 weeks left before expiration, these trades are a bit riskier than normal just because they have a shortened time frame. Next week, we will move to the next month for new trades. So let's go ahead and dive into the new trades for this upcoming week. We're going to start off with the covered call on Nikola Corporation, symbol N as in November, K as in Kilo, L as in Lima, A as in Alpha. The stock ended the week at $8.99 per share. I'm looking at buying stock and selling the July 9 call at 97 cents, hoping for a return of 10.9% in 2 weeks. Now, you enter this trade by buying stock for $8.99 per share and selling the July 9 call at 97 cents. This trade makes the most money if stock prices finish above $9 per share. The break-even price is $8.02, and in real terms, the stock purchase would require $899, and you would collect $97 for selling the option. And just as a side note, you could also look at selling the July 9 half call. You're going to collect less for selling that call option, but if you get the stock appreciation, the additional 50 cents, it actually is going to make for an even larger return relative to the cash outlay on this investment. So always important to do the math, check a couple of different strikes because you might find a trade that is even better than the at the money. Next up, we have a credit spread on Macy's, symbol M as in Mike. The stock ended the week at $19.63 per share. I'm looking at selling the July 19 half 19 put spread at 18 cents. That could give me a maximum possible loss of 32 cents per spread. Now, you enter this trade by selling the July 19 half put at 72 cents and concurrently buying the July 19 put for 54 cents. This is a credit spread because we are selling the spread And this trade makes the most money if stock prices expire above $19.50 per share. The break-even price on this trade is $19.32 per share, and in real terms, you would receive $18 per spread that you sell and have $32 at risk. Then our final trade on the week is going to be a debit spread on Palantir Technologies, symbol P as in Papa, L as in Lima, T as in Tango, R as in Romeo. The stock ended the week at $27.22 per share. I'm looking at buying the July 26 half 27 call spread for 30 cents. That could give me a maximum gain of 20 cents, or that's a 66.67% return in 2 weeks. Now you enter this trade by buying the July 26 half call for $1.30 and concurrently selling the July 27 call at $1. This is a debit spread because we are buying the spread, and this trade makes the most money if stock prices expire above $27 per share. The break-even price on this trade is $26.80 per share, and in real terms, you'll pay $30 to enter the spread, and your maximum gain is $20 per spread. So that's it for this week's show. I hope if you're based here in the U.S. that you continue to have a wonderful July 4th weekend. And if you're elsewhere in the world, I hope you have a wonderful weekend. Thank you guys so much for listening to the show. Thank you for sharing it with your friends who also like options. So I have the best fans. I get real email every week, and it's fun to reply. And every now and then I get to just reply via the next show. So thanks, Felix, for sending that message, because I know you weren't the only one that had that question. So hopefully it answers it. And if you guys have any other questions, shoot me an email. All right. Have a wonderful weekend. And as always, happy trading. Thank you for listening to the Weekly Option Podcast. Please subscribe to our show and visit us at www.theweeklyoption.com. Disclaimer: there is a very high degree of risk involved in trading. The indicators and strategies described in this podcast are for educational purposes only and should not be construed as investment advice. For our full disclaimer, visit our website at www.theweeklyoption.com.